Welcome to the Retail is Detail podcast. I'm your host, Jamie Hamer. This is where we go beyond the headlines and get into how great leaders, operators, and innovators in retail really think. From building teams, scaling businesses, to loyalty and data. Every week I talk to the people building and running and reinventing retail. Unpacking what's working, what's changing, and what's next. If you care about the detail of retail, you're in the right place. Welcome back to Retail is Detail. If you caught our first ever episode, you'll remember Reid Archer, MD of TradeCounter Direct, one of the UK's leading online tool retailers, and founder of Pricemaster, a pricing platform for managing 75,000 SKUs in one of the most cutthroat retail categories going. We said we'd circle back in a year, and here we are. Reid thinks about the fundamentals of pricing and service and builds tech around them. And in this episode, we're going to get into what's changed since we last spoke. The tools market, the Pricemaster build, what AI has and hasn't delivered, and where e-commerce is heading. If you run a retail business, or if you're building one, this episode's for you. Reid, welcome to the show.
Thanks for having me again.
And you were our very first guest, and you closed the episode with, let's circle back in a year and see where we are. So here we are. Has the last year been better, worse, or just weirder than you expected?
Well, I was thinking about this. The grey hairs in the beard sort of tell the story a little bit. I think if we do this every year, you'll be able to just tell by how much greyer I've got, how stressful the year's been. So
time lapse it.
Yeah, we've been busy, some goods, some bads. So a lot of good stuff on the Pricemaster side of things. We've had some challenges in the e-commerce side of things, from ongoing sort of legal things that we're dealing with and how we've used AI to help us through those. And then also we had like a big counterfeit issue as well.
Oh.
It was an outside problem that arose and forced us into switching from Magento to Shopify.
Oh, wow. Okay. Big moves. So without going into the specifics of that legal dispute, because I imagine you can't, like, what has it taught you about the tools market and the retail market more generally, and how have you used AI in that legal case?
Well, I mean, when you get to, you can't be an expert in everything, and I'm definitely not a legal expert. So when we have situations like this, to now build a dedicated AI around a case essentially with financials, terms and conditions, and all these things in there, and to have it as a soundboard to reference things is unbelievable, really. And we've really seen a lot of benefits from that. And then to actually write the legal letters, if we had to rely on advice from legal, it would have cost us tens of thousands of pounds. So to be able to have a soundboard, you can't trust it completely, but it does find parts of details that you just wouldn't find yourself. When you have terms and conditions of hundreds and hundreds of pages, to read every single minute one and catch little things like that is close to impossible. So AI has been super helpful for us in that way, and never expected that would be a way that we would use it. But
I've read that it now has the analysis capabilities of about an associate in the law firm and the drafting abilities of a senior associate. Does that kind of match with your experience?
Exactly. So really the only thing we were reliant on was a letterhead from a lawyer. The advice and all the other parts of it were pretty much guided and done through AI. So
you still need that legal liability insurance.
You do, but I think with lawyers, at some point, I think lawyers will be AIs. It will be a lawyer's AI versus another lawyer's AI, and it will be battling on data that way. Yeah, it's not an industry I want to be involved in, but it has been very useful for us as a company.
I'm sure there are legal podcasts grappling with this very topic as we speak. And, you mentioned last time we spoke, it's been a really challenging 12 months for tools, FFX, Homebase, Troy, all going under. It's been nearly a year since we recorded. Has that dust settled, or has disruption continued? And what are your guesses for who goes under next?
Hopefully no one. Things have settled, not completely for us. Some of our biggest brands we lost sort of access to. So we've had to pivot quite heavily from where we were. And we've had to change strategy from growth to profit. Rebates are obviously something that we have to consider differently than we did a couple of years ago. So there's been some really strong cases for other companies in our industry. Toolden and others are doing a great job. So yeah, I think it's steadying. For us, it's not where we were a couple of years ago.
Okay, cool. We just had Eddie Grovu from Toolden on the podcast, so you can hear more
Oh,
about
cool.
that very soon, if it's
Love
not out
Eddie.
already. So what would you say is the trading mood across the tools and building merchants industry at the moment?
I speak to a lot of people within the industry, and I'm not hearing loads and loads of great stories of growth. And it seems to be a little flat, I think, would be the overall consensus of it. Yeah, hopefully things will change, but with tariffs and all these other things, there's a lot thrown at us all the time. And yeah, I wouldn't say it's the perfect trading environment to be in.
Absolutely. Well, we can move on to happier things. So since we recorded, like, Pricemaster was a very early stage. You now have clients making 15,000 automated price adjustments per day. What did you have to change and build to handle that scale?
If you look at where we were from this time last year to what we've built now, it's incredible. And again, AI has been our superpower for many different ways of just general development, planning, structure, maintenance within the software, how we get customers. Me and Ed, who's again our main developer, have said that the AI tools like Claude are almost like crack for proactive people.
Okay.
It gives you a superpower that you can constantly sort of rely on. You can task. It makes you 5 times faster than you normally would be. And now it's in your pocket, and it can tell you when it's completed a task, and then you go, all right, let's plan another. So it's kind of, it's addictive if you're a productive person, because it scales you beyond anything we've been before. So and we just started playing with the new Fable release, and again, from what we were doing before in Claude Code to this, it just keeps getting better, faster, and more capable. So we're making absolute full use of it. Right?
Yeah, well, we're as a tech first product, we're doing 90% of our coding via AI. The 10% still manual. What
Yeah.
percentage would you say you're at?
At least that. I think the day-to-day sort of just writing code, no one's doing that. The AI companies aren't doing it. I saw an interview with Claude, and they say that they don't write it. They have to know exactly what they want out of it, and you have to be very good and very clear on what the outcomes are and what you want it to do, and you have to monitor it very closely. But it's from bashing keyboards and writing code, those days I would say are almost gone.
No, very cool. So just talk us through, just for those who don't have the context in the previous episode, what is Pricemaster? Why did you build it? And how's it going?
Yeah, so it is a pricing automation tool, which is trying to do the opposite of what other ones are doing, which is the kind of race to the bottom. So the fundamentals are that we look for margin opportunities, and it's not just a 1p cheaper, 1p cheaper, 1p cheaper tool that ends for retailers in a negative way. As a retailer, we use tools like that, and it kind of did. So we had to build our own. So this was built out of necessity, not just we thought it was a good idea, let's build a pricing tool. We wanted to build one that worked for us and that increased our margins. And and that's where Pricemaster sort of spawned from. And the concept and ideas behind it is that we look at market data, we scrape and fetch huge amounts of market data on a daily basis, and we want you to be aware of that. But what we then do is we identify via sales what is working well, and then we want to flip that into a more price discovery mode. So instead of just saying, okay, the market's here, you want to match the cheapest, is we say you're selling 100 a day. What happens if we put the margin up again? Do you still sell 100 a day? And then we validate that. Then we go up. Then in 3 days we go up again. Did it upset sales? No. Let's just keep going. Because if you've got 75,000 products, everyone's going to be different. Some of them will be reliant on your ads and maybe price. Some of them you might be organically very high, or you're getting recommended from blogs or anywhere else, and people are landing on that product, and it isn't market sensitive. So
Sure.
we want to discover which ones are market sensitive, and which ones aren't. And we want to do all of that while not upsetting sales sort of run through. What we also then do is once we do those tests, is we log them, so we can say, okay, you were selling 10 at £100, but then you were selling 9 at £105, and then you were selling 8 at £110. What
Mm,
is your best margin point to sell it at?
yeah,
And a lot of people would rather sell 8 at £110 a pop than more. But but then we're now building in run rates. So if you're selling a lot or you have a lot of stock, you might want to be more aggressive. If your stock's running out and your container's a long way away, you might want to slow those sales down slightly and gain margin. So we're dynamically changing on a daily basis at a SKU level to always maximize the particular SKU for the highest margin.
fascinating. So in that, and so I noticed you now plug into Google Ads, which you didn't. That wasn't part of the discussion last year. And then
Yeah,
you're also plugging into ERP and looking at inventory and stock control. So this
yeah.
is meant to be a much more holistic system for improving sales and margin overall, or rather than just something that looks at the price and the effect in the market.
Yeah, we don't want it to be an outside only looking device. It needs to look at the fundamentals behind the business.
You know, you're in terms of launching the product and getting it out to market. You're also, you're blogging a lot. Some
Mhm.
really interesting blogs we'll come on to. You are bringing in guest writers and speakers, basically becoming a media company as well as a tools and a pricing SaaS company. How's that going for you? Is that actively generating leads?
It is. I think we have to, as a SaaS business and just generally being out there as a new business, have to try and communicate what we're doing. In the back end, things are changing so quickly. We
Yeah.
have to communicate with that. Sometimes we can forget that, like, we've got all these amazing new features and all these new things that we're doing,
Yeah.
and you can get carried away internally making them. But if no one else knows about them, it's no good. So we're trying to do that as best we can while maintaining a small team and, keeping it in house as much as possible.
Nice. And you've recently relaunched a case study that's a Bosch SKU from your own TCD, your own sort of wheelhouse, going from £59 to £95 profit per sale, and 76% of your competitors then followed the price up. Does it
Yeah,
surprise you that more people aren't doing this SKU-level analysis?
it does. That's what we call our AI margin miner, where we kind of increase the price, hoping that we set a higher benchmark. So if
Hmm.
we're cheapest with someone else and we put our price up, we can monitor whether it follows. If their tool follows us, we've set a new benchmark and everyone's making more money. And then we go back to saying, okay, at that higher price, are we selling the same amount? Do we need to be at that lower price?
Hmm.
And we're discovering where, and each company will discover where they need to be in the market. And the main key point is it's not always the cheapest. It might be on some SKUs, but it's certainly not on all. So this is the journey we're trying to sort of help retailers discover.
Yeah. And you posted a pretty provocative piece on the ethics of repricing tools, which is, obviously highly relevant to what you're doing. Was that a confident call, or do you generally worry that repricing is damaging the market?
I think the wrong type of repricing will damage the market, and it has done in the past. The
Mm,
whole reason for us, doing what we're doing is that we hear from suppliers, brands, that the online side of things becomes corrosive to pricing, and a lot of fingers were normally pointed at pricing tools.
mm,
So we wanted to try and change that. Unfortunately, the market and any sort of market, it is kind of, it forces that anyway. Just look at
yeah,
Amazon and the buy box. You'll get the buy box if you're the cheapest, and it sort of, it forces people in that direction. I think it could go into the prediction that I did last year about AI agents. I saw that Google have released what is now pretty much an AI agent at their last keynote. And
mm,
one of the points on there was that the shopper would set a price that they would want to buy a product at, and the agent would always go out and look
yeah,
for it. And then as soon as it hits that price confirmation, it would trigger the sale there and then.
right.
Now, in the minute, pricing, if the right pricing will help your conversion rate, but when it gets to the point that your pricing triggers a sale, 100% triggers it, it's not a conversion rate increaser. That's a you get the sale or you don't get the sale,
Right.
which we're going to stay on top of and see how that plays out, and we can probably play into that with some of the tools that we'll generate. But it doesn't necessarily bode well for margins at this stage. It
Mm.
concerns me as a retailer that could be another way of pricing being too important and pushing prices down. So our job is to try and find ways around that to make sure that it's still a profitable sale at the end of the day.
Yeah, that's really interesting. It reminds me of my time in the financial markets and put orders and things like that, like
Yeah,
at a certain level at which people will be willing to buy what you don't know until that happens. If
yeah.
people are using their personal Claudes or ChatGPTs for that,
Mhm.
shouldn't that pricing that they're waiting to buy at be discoverable?
Yeah. I mean, again, whether it's a predictive discoverable or there's a way of finding that out, I'm not too sure yet. It's all going to be a bit
Future
of a
learning.
new thing, which is great. As a company, we like new challenges and we want to figure out how things change. They're never going to stay the same. And the world in the tech world as it is today is changing
Right.
faster than you can, well, hopefully not keep up with. Hopefully we can keep up with it.
Okay, very cool. And you said previously margin means the same thing everywhere, and the ambition is to go global. Is that still very much the case? Has international expansion started for Pricemaster?
Yes, we have now turned it into a multi-currency platform. So we have nearly every currency there. We're working with some Australian companies, and we're not actively going out into other countries yet because there's a lot for us still to do in the UK. But as it comes to us, we're more than happy to take on different markets, different currencies, and different locations.
I want to go back to one of your predictions. So you said we'd hand credit card details to agents, just talked about that briefly, and then prices to target. How close are we to that?
Well, it was a year ago that I sort of thought that was going to be the way that it goes. There's a lot of people making things ready to do that. I don't know how many people are actually utilizing that. I'm not, as a pretty high tech forward thinker. I haven't yet given my. I know people with the Claude bot thing, Claw probably have. I'm still
Probably.
waiting for a reliable company to potentially put my credit card details in and allow a bot to go off and do that with guardrails of how much you can spend and all the rest of it. I think we'll get there, but maybe this time next year, I think people will be utilizing it. I don't think there's many people out there with chat bot or with bots out there shopping for them as of yet.
Okay. One,
What we are
what,
seeing, though, I suppose,
yeah.
we're starting to see the integration of Shopify listings in chat bots. So
Mhm.
if you ask for a product, it'll pop up in a chat bot. So in GPT, we're not seeing the advertising rails or the advertising part of it come yet. So I
Right.
think when that happens, shopping might change quite drastically. If you know that you can go to ChatGPT and buy through there, that might be a good trigger of people changing how they do it. And
You
I think
mentioned the
that,
advertising layer. So you're predicting that ChatGPT will have listings, much like,
yeah,
and so
Google.
you'll be able to pay for better placement in search.
Yeah, so I think the rumors were that last time I read that there would be sort of a fixed fee, so like a 4% fee to ChatGPT for taking the payment within a chat. That would
Mhm.
mean that you don't go off to the person's website. The listing comes in with the chat, they hit buy, and the order comes through to Shopify and you ship it out, which I think they'll be getting there soon. And with all the IPOs happening now or in the next couple months, so GPT is
Yeah.
going, Anthropic, I would say that there's going to be a flurry of future things coming out fairly quickly to help with their
Future things
LTO.
that can be monetized.
Yes. Well, especially ChatGPT, they're still losing billions of pounds a year. Anthropic was the first time it was profitable. So, yeah, I'm sure we'll be getting a lot of new things coming out in the coming months.
Yeah. Exciting. What are some things you're expecting to see?
I think the advertising side of things, it's going to be based around profitability, I would have thought, for the IPO side
Mm,
of things. So yeah, I mean, you've got the Mythos model that came out. So
hmm
I think one thing as another potential prediction with the release of this Mythos model is that security is probably going to be a big thing. So
hmm
whether validating that you're a human, securing websites every which way is probably going to be important. Because if you've got models out there that can break into anything, security is going to be something that we're all going to have to focus on as much as possible. So maybe that's the next little gold rush that's coming.
Very nice. So if it means that buying in ChatGPT or Claude means that you don't go to the storefront, what does that mean in terms of
Brand.
upsells and cross sells, which dear to my heart as Lotsa, but also customer loyalty? But what are you expecting the trends to be there?
Yeah, I mean, it sucks a little bit. It was kind of like Amazon in the sense of being a reseller on there. You're just a part of Amazon
Mm,
as a fulfillment person. You might have your logo slightly somewhere. It kind of feels similar to that. That maybe they would pull through some branding. Um, Google, it doesn't make sense for Google to do that in my mind because Google's whole thing was the blue link to a website.
yeah,
If they don't have that link to the website anymore and it's all fed within the results, it's a tricky one. I don't know how they'll go around it. Maybe we'll have to start making themes within the chat GPTs that could put our brand through. And someone
yeah,
like Lobster, maybe you have to do integrations into the likes of the shopping chat GPTs so you
yeah.
can add to baskets there. So
We'll get right on that.
yeah.
Um,
You have to get hold of Sam Altman. I'm sure
yeah,
it'll be easy.
have my ways.
Yeah.
So step one, get hold of Reid Archer. Step two, Sam Allen. Fun. So in terms of um, the tools an interesting category because it is quite brand led,
Mm.
and therefore you'd have a pretty good idea of what you want and what price you want it at. But is there an AOV or different categories that won't work as well? Like, would people buy high-end furniture or really high-value electronics just from a GPT chat, or would you how do you see that evolving by category?
Yeah, I think like everything, if you look at the TikTok shop and stuff like that, it's people get used to buying at small levels first.
Yeah,
So we had a TikTok shop and the average order value was under 30 quid for quite a long time. And we wouldn't expect to sell high end top drain cleaning machine or anything through there.
yeah,
Um, so I think that just comes with confidence. I would think so. In my mind, that would happen with agents as well. If you're going to hand over your credit card details to an agent, you'd probably want it to buy things like toilet paper and soap, or paper, stationery, little things that it can't get wrong until you're confident that you suddenly increase it. And I think that would probably be the same with just buying within GPT. I think confidence is just where, back in the day when the internet first started, the thoughts of selling a car or anything
yeah,
super expensive through the internet, people would just go, no way, I'd never trust that. And then the trust builds and people now will buy what houses or whatever they want through the internet. So I think it's just time and confidence.
yeah. The prevalence of car vending machines in the US is fascinating, right? Could
Well,
we see a tool vending machine where you just go pick up your tool once you order it
yeah,
online, or a sofa vending machine?
yeah, it's crazy.
It's fun. So you in episode one, you predicted that AI was going to touch all aspects of e-commerce: customer service first, then warehousing, then delivery. Where has it moved faster than expected, and where is it still dragging its heels?
We're not robots yet. We don't have robots in the warehouse yet. I think that they keep talking about robots are going to there'll be more robots than humans in a couple of years. I don't know about that. So that seems a little far off still. For us in e-commerce, the customer service side of things was the first place we hit. But
Yep.
then it was a bit basic. So you could only train it on your warranty terms and conditions and things like that. And it could answer basic questions of our return date window is this and we're opening hours of this. And it was a bit boring. So what we've done is actually built using Claude as our own system where all of our sales data comes in, all of our customer tickets come into one central place that then gives the AI access to answer the more complicated questions, which could be, there's a delay on this. Why is there a delay? The supplier's got a delay. It understands where it is, it understands the ETA of when it comes in, and it can answer the question fully. Yeah, sorry, there's a delay. This has happened. This is when it's expected. The question's answered. So we're getting to that point now where, but we're still not fully automated, where we still want it to draft the response, human look at it, then we trigger it off. So we're almost at full automation, but still not 100% until we're confident that it does the job. I would think that not every e-commerce company is there yet, but I think that's becoming easier.
Absolutely.
Yeah.
Okay, that's really helpful. And then what areas? So customer service doing well, robotics not so much. What are some other applications you're seeing for TCD?
Things like marketing. So like building emails, the image generations have just stepped up quite nicely. So that helps. Social media content, that's becoming a little bit, I know you go on LinkedIn too much. You do get a message from, new people, and you can tell straight away that there's like 4 threads of just checking in again. And that kind of is that'll get to a point where it gets a little bit, the conversions on that they'll come down because people will get used to it. So yeah, I mean, any which way we can get AI involved, we're looking at those options. Not to necessarily get rid of people, but to scale and to streamline and just to make sure that things are looked after properly.
Yeah, awesome. Let's just touch on TCD briefly. Then we'll come back to Pricemaster in your future journey and some more predictions for the next year. So at the time we spoke, you have 7 Shopify stores and 1 Magento. You now have 8 Shopify stores, and you thought that Shopify was likely to be more future-proof. Conversely, we've just had Brian Copeland of Foundation Commerce on the podcast talking about how people blindly choose Shopify, and Magento plus Hoover can do the job with lower payment fees. Where do you now stand on that debate?
We did the Hoover thing, and it was probably harder to integrate that in Magento than to transfer from Magento to Shopify successfully. I still stand by Shopify. The Magento cost us a lot. It was slow. The development was painful. It was a lot trickier for us. And I still think that Shopify I've got a lot less headaches, a lot less worries. The consistency of how it works is just stronger, I think. The reason we made that change goes back to the horror story that I kind of alluded to earlier on, where we had a counterfeit issue that with it. Essentially, I'd love to hear if anyone else has had a similar issue who listens to the podcast. But essentially, we were trading normally, and one day sales a bit low. We think, what's going on there? End of day, come back the next day, sales are still really low. Let's look into Google. All of the ads are active, everything's fine, but no impressions and no clicks. We're like, okay, no notifications, no errors, no anything. So we're checking everything, Merchant Center, AdWords, everywhere. No notifications, no warnings. The next day, 0 impressions, nothing. Our organic had dipped. We're getting a couple little sales trickling in. So, there's no Mr. Google to call, unfortunately. So we are just sending out emails to anyone we can get hold of at Google, and they're saying the account looks fine. There's nothing wrong. Nothing we can see. There's no alerts. So we start to dig deeper. We're thinking, have we been hacked? Is that, what's going on? Have we been blacklisted for whatever reason? Nothing anywhere to point that there's anything wrong other than no impressions. We finally look into Cloudflare and find that there was a counterfeit strike that was put onto our account.
Right.
to do with a certain brand. So then we deep dive into that, and we realize that one of our brands, I won't mention who, had employed a company that was scraping around and looking for counterfeit products. Now, the background is TradeCounter Direct has been a live domain for 17 years, trading for 17 years. This bot thought that we were selling a counterfeit t-shirt, which we'd never sold before, one t-shirt out of 75,000 products. And the counterfeit strike hit us, and Google, instead of, or anyone reaching out to us and saying anything first, never happened. And then Google just suppressed the entire website because they thought that there was a counterfeit issue.
Wow.
That suppression made us disappear completely. So we had to figure out a way to get hold of the manufacturer or the brand. Then they had to write a letter to then had to go to Google. Then Google had to sign that off as, okay, it's not counterfeit. And then the suppression was left. That process took way longer than it should have, because
how long are we talking?
It was nearly 2 months, 2 to 3 months. So in that time, we were thinking, well, are we ever going to come back from the suppression? Is this a long-term thing? So we were thinking, okay, well, maybe we're going to have to switch domains. We'll have to change to tcd.co.uk or tradecounterdirect.co.uk instead of .com. So in the panic and stress of it, we decided let's rebuild off of the Magento platform. We completely rebuilt a Shopify site. We transferred everything from TCD. We rewrote every description, every meta description, free build of the category structure, 301 redirects on everything, and made a complete migration from Magento to Shopify within about 3 or 4 weeks.
Wow.
Without any agency help or anything. But so by the time we got there and we're thinking, oh, we might have to just change our domain, this suppression was lifted. We'd resolved it. The t-shirt that we were selling was legit through a legit distributor in the UK. And this was a wrongful counterfeit charge that hit our website and disappeared us for months and months. So this, I don't know if this has happened to anyone else out there. I do know the name of the company that did it, but I won't share that either. If someone wants to know, they can ask me later. But it was an extreme scenario to change from Magento to Shopify. We did it out of necessity. Now we have done it. I would never go back. Magento wasn't the cause of it. But looking back now, I'm very glad that we were kind of forced into that decision to make the change, which is beneficial now.
So this seems like a very easy way to sabotage any website you might want to. Who needs to improve the most in this? Is it Cloudflare? Is it the brand itself? Is it Google?
I think the tech company that's selling will find counterfeit products out there for you to brands. I can see why a brand would want to do that.
Yep.
And that makes perfect sense. The process of how they did it was completely wrong. You contact the company and you say, is it? Then you get proof. And if there is no proof, then you do a counterfeit claim. None of that was done. It was just an API trigger that went straight to Google. And then I don't particularly think Google's reaction was fair. For a company that's been trading for 17 years, to suppress it because of one thing is shocking. I mean, if we were a humongous company with lots of staff, for 2 months, your warehouse would just be empty. It would be devastating. We were lucky enough that we have multiple websites and different channels that we were able to sort of get through it. But if you want an e-commerce horror story, there's one for you.
Yeah, I appreciate that. And to be clear, this issue might have happened even if you were on Shopify, but it just gave you a grace period to make that transition.
Well, we had the same product on a Shopify site.
Yeah.
Because we have tradeworkwear.co.uk. So the product was in multiple sites and it only hit the TCD one.
Interesting.
Yeah.
So there's
So
a potential platform reach issue or advocacy issue.
I think the positive, I was trying to look for a positive out of it, is that if you're on Magento and thinking of transferring to Shopify, it's not as big of a deal as you're probably convincing yourself it is. Like I was, I thought, it's a huge job. We'll never do it. It'll take forever. It's not that big of a deal. It's not easy. Don't get me wrong, but I think the benefits of that change for us as a company, other than the issues that came with it, we're in a better position because we're on Shopify now.
Okay. What do you define as those benefits?
Management of servers is you don't have to worry about that. The speed, conversion rate, mobile, just the infrastructure. We installed Pricemaster, the app, and then had our account set up and API firing into Shopify within no time at all. There's lots of apps on the App Store that are really useful that you don't have to have a developer to make for you. Loxa integration was way easier on Shopify.
That was definitely true.
Yeah.
Well, now we have an amazing Magento app, but we didn't know.
No.
So yeah, okay. Thanks for that, Reid. And then of course you can get the Pricemaster app as a enormous benefit. So and just coming back to the way you think about things. Obviously, you've gone through a lot of iterations as an entrepreneur and a business owner. You said previously your mentality is give it a go, have two outcomes. And running two businesses at scale now, has that attitude had to mature? Have you changed the way you think about things?
Yeah, I mean, sometimes doing too much can take away focus, but also being diversified enough to withstand certain issues is also been beneficial. So yeah, you learn more from the losers than you do the wins, and that's a Michael Jordan quote there. You walk away from a loss and you go, okay, I learned from that. I need to change and need to do that. If you walk away, if you're winning all the time, you're not improving. So as long as you can survive the losses, you're all good.
And you have done so with aplomb. Your most controversial prediction was AI is the biggest thing coming. If you don't adopt it, it'll be painful. Is that still your biggest prediction, or is something else around tariffs, consolidation, platform shift moved ahead?
I don't think there's anything bigger than AI about at the minute. If you just look at the stock market and how it's disrupting everything, and for us especially, is now a software business. They say software is dead. I completely disagree with that. I think large software companies might very well struggle. That have raised millions and millions of pounds, have 500 members of staff. Yeah. And now a small independent company could probably get their way quicker. I think that could be. And I think if you don't have a moat and you're just your software builds a calendar, then you might be in trouble. But no, I think software as a whole, there's going to be a lot of smaller independent niche software companies that are the big monsters might well suffer, but I think the smaller ones will be okay.
Okay.
Actually, I think we'll really benefit.
All right, so we're both in great places. Appreciate that.
Yeah.
And your craziest story you told was hilarious. Getting in a bunch of turtle wax just before COVID, and then thinking you were completely doomed, and then selling it all. Have you had a moment like that over the last year? Has there been anything with Pricemaster that seemed like a disaster, but you see come good?
Pricemaster, no. I mean, the trademark issue that I just said about was a pretty big one. By that, no, I haven't bought any more containers of pressure washers.
Okay, I'm glad to hear it.
Luckily,
that's stabilized.
Yeah.
All right, Reid, great chatting with you. Thanks for the insights, and we will see if we can do this again. Go ahead.
Well, I've seen you guys grow considerably into different markets and stuff, and also switching from, was it Bolt, the original?
We were called Bolt Cover, yeah.
Yeah, and then now to Loxa, which I love the branding, the colors, looks really good, and also I suppose the name Bolt seemed a little bit into the tool area. Loxa can be anything. Was that choice, or was that just it happened? And
well, The answer I give is that Loxa is a shield bug, and we like to 4-letter snappy name, and it goes with luxury, with jewelry and watches which we're about to launch, as well as you say, tools. The honest answer is there was a trademark dispute as well.
Yeah.
Yeah.
But well, again, if you see the outcome, I think you're probably much better off with that outcome, to be fair.
I agree.
And
We did pay a branding agency $10K just before all of these brand tools became available, probably a year before this all became available with AI. So, that's annoying. But I think the price of everything, as you say, legal support, things like that, was higher a year ago than it is now.
And so going into all these different markets now, you're saying watches and jewelry and stuff. Are you seeing much difference between the markets in like how they do things?
Yes, but not as much as I would expect.
Okay.
So I think every category, when you talk to the individual retailers, it's very important you position it in that way and use their language. And you've got to treat opticians and their patients and jewelers and their clients very different than furniture merchants and their customers, or electronic merchants, and maybe more transactional categories rather than experience categories. So you need to talk that language, be an industry insider, understand it to a depth. That's what I'm coaching the guys here on. Just become industry insiders if you want us to win in a given category.
Yeah.
With that said, the fundamentals of producing something, shipping something, putting it through an ERP system, getting it on shelves, getting it online, we're going to have more, as we branch into those categories, more people from the luxury and the electronic space where we're just beginning to become quite big. And we'll talk about those differences more. But at the same time, Amazon and OnBuy, we've had on the podcast, and various other retailers are able to sell some of all of this. Maybe not the really high value specialist stuff, but some of all of this, because fundamentally, the way the product gets to an end consumer and how the margins work is the same across all categories. When we think about a risk, we think about it in the same way. Like, if someone is buying insurance on a couch for 5 years, how often are they staying in that couch? How often does that couch get fire damaged? How often does it get pet damaged? Same thing with a ring, like an engagement ring, which I just had the pleasure of buying at great expense. Sorry, that was a wedding ring. Well, I'm engaged. Right. But we look at how often is that damaged? How often is that stolen? How often is that lost and then claimed it was stolen? Because that does happen, right? And then we just factor all those in terms of the correct price we should be asking the consumer, so that it has an appropriately high payback rate on the pound you're spending on insurance.
And how do you make those decisions then? Is it AI that you're using, or is it your own data, or is that industry data a little bit, or a mixture of everything?
It's a mixture of our own data and industry data. So we have some proprietary data to help us underwrite these categories, and we do our own underwriting, but we also source it from various parts of the market to double check our estimates and make sure we're aligned with the people who are providing us their balance sheets.
Yeah. And do you think that will evolve as you get more and more clients and more data? You could say, oh, well, actually, we thought it was going to be bad on here, but it's better.
100%. We will need to adapt our rates at times, and things like tool theft is a really interesting example. Tool theft went up massively during COVID, actually declined a bit, and is now up again. And it is probably very highly correlated with the socioeconomic environment and inflation, right? As things get tougher, people are going to steal things. I would be surprised if we didn't have to revise our tool rates up a little bit. I think they're pretty modest at the moment to accept for that. And then in even higher theft categories like bikes, which we're re-entering soon. Bike market is half the size of the tool market, and there are twice as many thefts. That's going to be an expensive insurance.
Yeah. What do you think is the worst then for theft? Is it the bikes? You think got to be up there?
When jewelry theft,
I don't think jewelry. I can't imagine jewelry being stolen regularly. Maybe lost more than stolen.
Yeah, you see a high level of watch theft. But then watches don't get damaged very often. So I think we've got the watch rates we're about to put out are pretty attractive to the end consumer, I think, when you think about the chance of a watch being stolen from your wrist or from somewhere in plain view.
So what are your...
The highest theft category is probably bikes on a per bike basis, but I'd need to double check that.
And what's your predictions then for the next time we talk? What are your predictions of areas you'll go into? Where's Loxa going to be in a year?
So I think we're thinking about it the same way that you are with Pricemaster, is like, what are the biggest issues we're solving here, and how do we make it as easy as possible for the customer? Because everything ultimately, Uber, the way we now search for travel using AI, and purchasing with AI, it's all about convenience. So how can we help people access insurance where it is the most convenient for them and they're aware of it? And a lot of that work has been done by big players in the market, what they call NACs or embedded insurance in cards or comes with your bank account. That's good, but it's often flawed and people don't know they have it. So how can we make sure that insurance is available at the point of the purchase journey when people are buying, when people are conscious of the things they're buying and want to protect them and want to know they have tailored insurance, ideally without an excess. So we're looking at various channels of distribution, including a direct-to-consumer product for things up to $5,000 in your house. How can we make sure that that is there when insurance is relevant and timely? Because people don't care about insurance when it's not relevant and timely, unless they need it, right? Motor and home, like that, you can sell those if it's not timely, but everything else, it's got to be there. So we're looking at how we do it pre-purchase, i.e. embed with cards or payment systems to make sure you're already protected. Post-purchase, i.e. you just bought something, comes through in your Gmail, there's a widget. Yes, I want to ensure that. We're looking at some very innovative ways to reach customers, which will involve working with our merchant partners, will involve working with fintechs, will involve launching our own products, which just make it as easy and relevant as possible to add the protection you want to your purchases.
Sounds good. Cool.
Thanks, Reid. Thanks for being the first person guest to comprehensively quiz me. I do appreciate that. And thank you, as always, for your insights. Looking forward to this next year.
Yeah, cool. Excellent.
And that's it for today's episode of the Retail is Detail podcast. This episode was brought to you by Loxa, the Klarna for insurance, helping protect every retail customer everywhere. We help retailers offer product protection seamlessly on all major platforms, online and in store, across all insurable categories. Visit loxacover.com to find out more. You can catch previous episodes on YouTube, Spotify, and Apple Podcasts, or at retailisdetailpodcast.com. You can also follow us on LinkedIn, TikTok, and Instagram to get insights from the podcast every day. I've been your host, Jamie Hamer. Thank you for listening, and see you next week.